Happy Friday, guys. It's your boy Stas here. Welcome back to another video. So listen, we have a couple stocks to break down. Nike, FedEx, Micron, all of these just reported earnings. And we also have to go over the indexes, which, well, they're all in the red. The S&P's down about 0.5%. The Dow's down roughly the same. Same with QQQ now that I'm looking at it. And the Russell is leading the losses, down almost 0.1 or not 0.1, 1%. Yeah, it's at 0.8, 0.9% in the red right now. We're not looking good, guys, so we have to break down the charts, the earnings, what I'm doing. But first, hit the like button. Do not forget to subscribe and get your 30 stocks from Moomoo. Deposit at least $100. You get 5 stocks. Deposit at least $2,000, you get 25 more stocks. So use that link down below or go to StasSurfFest.com/Moomoo. And now, cheers, guys. Let's dive into it. So, like I said, we are down across the board again today, guys. And it's pretty clear at this point, SPY is getting rejected at 570. That's a big resistance in the short term, and it kind of looks like we double topped at that point. We hit it 4 days ago. So what? That was on Monday or Tuesday. We hit it, right? 570. Then we hit it again yesterday and the day before that. So maybe a triple top is what we're seeing here on SPY. Now we're back under both moving averages on the 30-minute chart. We have a death cross, right? And on QQQ, let me pull this up. You guys are seeing something similar, right? 485, big resistance. We hit it on Tuesday, Wednesday, and yesterday. 3 times we failed breaking out of it, so triple top at that point. And now we're seeing a death cross on this 30-minute chart. We're back under both moving averages, so the bears still have a tight grip on this market, guys. It's pretty obvious. You're noticing here on the 4-hour chart. I mean, look, we're getting pushed back under this 50 SMA on QQQ, and same thing on SPY here, which, to be honest, man, I'm not surprised. Did we not talk about this literally last Friday? Last Friday, we had a crazy green day. Do you guys remember that? And I was like, be careful. Don't get too excited heading into the new week, right? I sold my NVIDIA call options last Friday when the stock was at like 123. Do you guys remember that? And here we are. NVIDIA's at 116. The markets are down from last Friday, I believe, or it's just been a rocky week in general. Now the dump off is accelerating. So this is what I was talking about. This is why I was saying be careful if you're up on a trade, right? Don't be scared to lock in gains. This is the type of market that we're in. And a lot of you guys already know that. But for the newer people out there, you got to be careful in times when the VIX is up over 20 points, when there's uncertainty, a trade war, the tariff situation going on. There could be a lot more rockiness. Who knows, right? And you got to be careful with your trading. And for long-term investing stuff, right, 5, 10, 15 plus years out, this is a great time to buy, in my opinion. I'm buying a bunch of stocks left and right that I plan on holding for years, ETFs as well. But with trading, right, the short-term stuff, I'm being very cautious at this point, right? So let me show you guys what's going on with these 3 companies, these 3 stocks. Let's go over Nike. NKE is number 1, and this one is down again. What else is new? Nike's down 6% on the day. We're trading at a fresh low on the 4-hour chart. We're taking out the multi-month $70 support, which is not ideal for the bulls here, guys. And on the 1-year chart, you're noticing we're at a fresh high, or a low rather, not a high, fresh low. And on the 3-year chart, same thing. We just hit a fresh low on this time frame. And we all know, guys, Nike has been going through it. The company got a new CEO a couple of months ago. They're trying to fix their business model. Now tariffs are going to screw them up completely in the short term. We'll talk about that here in a second. And this is a stock that I used to own. I bought it, 8 months ago. I was like, oh, I'm going to get into Nike. and play the turnaround story, and I sold it 2 months later because I snapped back to my senses, and I was like, Stas, what the heck are you doing, man? You know not to invest in companies that are turnaround stories that really haven't seen any progress of turning around. You're just hoping and praying at that point, right? That's a mistake a lot of investors make. They see a stock down, 70% from highs, and they're like, oh, I'm going to buy it. It's a quality, company, right? Which on the outside, Nike might seem like a quality company, but then you realize, wait a second, there's a lot of problems with Nike, right? So if you're trying to invest in these turnaround companies, might work out for you, but it might take forever, So I realized that, I was in the stock for 2 months. Good thing I didn't lose money at all, really. Maybe a little bit, barely. I was in the low 70s, mid 70s, and I got out because there's just so much going on with Nike. Competition, margins collapsing, sales collapsing. The company went all in on direct to consumer pretty much. That didn't work out. Now they're trying to pedal back. They got the new CEO, which, we'll see how his ideas, are implemented, how they affect the business over time here. It's just, I don't want to be a part of a story that is not strong already. It's like there's other places where my money could be invested. So let me show you guys here. And there's a lot of names like this. You got Nike, you got, PayPal could be considered a turnaround story that I would not touch with a 10-foot pole. I'm pretty sure they're tanking now as well. Didn't they report numbers recently on a side tangent here? Or not even, yeah, recently they did, and the stock went from 95. Now we're at $70 again. These are stocks that you got to be careful with, right? You got to be careful, and I like to avoid them. So let me cover Nike real quickly here, guys, and show you what's going on with tariffs. So they did decent on their numbers. They beat EPS 54 cents versus 28 cents, but they, we'll go over this in a second. They also beat on sales, $11.27 billion versus $11.01, so they double beat, but sales dropped about 10% year over year. Think about that, guys. And let me actually pull up this article very quickly here so we can dive into this and get a little more insight on the tariffs. So we can see here that Matt Friend, the chief finance officer, or the finance chief, he said Nike expects its sales to decline, so the guidance is bad too. He expects their sales to decline in the fiscal fourth quarter to be at the low end of the mid-teens range, which is not good. It also expects its gross margin will fall between 4 and 5 percentage points as it ramps up efforts to liquidate excess inventory and stale styles that are no longer resonating with consumers, a process it expects to continue into fiscal 2026. He said, we believe that the fourth quarter will reflect the largest impact from our actions, and that the headwinds to revenue and gross margin will begin to moderate from there. We'll see. I don't know if I have full faith in that, to be honest, guys. And he said, we are also navigating through several external factors that create uncertainty in the current operating environment, including geopolitical dynamics, new tariffs, volatile foreign exchange rates, and tax regulations. And the guidance is far worse than analysts had expected. Consensus estimates from LSEG show Wall Street had expected sales to be down 11.4% in the current quarter. That's, oh man. And we can see here sales dropped. I think this is the full year number, right? Sales dropped. Let me pull this up and see here, guys. They dropped 9% year over year in this quarter. And Nike saw strong demand in December, followed by double-digit declines in January and February. Let's see here, guys. During the quarter, Nike's gross margin fell by 3.3%. Not great at all. And the weakness in China is still very, very prominent, right? It looks like here somebody said I spent some time over there in December in China. I hadn't been over there in a while. The competition is a bit more aggressive than what I remembered. And that's another thing. That's another reason why I'm not loving Nike right now. I mean, look, you got OnCloud, you got Hoka, you got Brooks, you got, I mean, so many competitors. And wherever you go, Dick's Sporting Goods, Foot Locker, the malls, this, that. I mean, you're seeing so many different shoes now, and people are picking other options. And the tariffs here are insane, guys. Let me come to this part of the article. I forget where it's at. Maybe more towards the bottom here. Where the heck is it? I missed it, didn't I? Oh, yeah. Out of the hundreds of suppliers and manufacturers that Nike works with, about 24% of them are located in China, according to the manufacturing disclosure published in January. And listen to this. If the retailer doesn't raise prices to offset tariffs and can't push the cost entirely onto consumers, Nike's margins are expected to take a hit from the new duties, right? This is, man, when you're talking about companies that are not affected by tariffs, Nike is not on that list. They are affected by tariffs. Big time, right? Big time. So that's another reason why I don't want to be a part of the stock, at least now. So yeah, I think Nike's a disaster, guys. I'm not going to lie. If you're buying the stock now, go ahead. Feel free to do whatever you want, but realize this is not going to turn around in a year, right? This stock, it's not like you're going to buy the stock, in my opinion, and it goes to well over $100 in a year. I just don't see it. It might take 5 years plus for this thing to play out. At least 3 years, It's not looking great. The stock's at the same level it was at right now back in, oh my goodness, man, 2015, a decade ago. Think about that, a decade ago. And I know I mentioned PayPal as a turnaround story. Another good example is Disney. I mean, Disney, oh my goodness, man. I was in the stock for way longer than I should have been. I finally got out of it like a year or two ago. I'm never touching Disney again. These stocks, man, they might have great brands. They might have iconic athletes that are a part of them, iconic movies, TV shows, but that doesn't mean they're good investments. That's another big trap people fall into. They think, oh, Disney, it must be a great stock, right? It must be a great investment because I watched Disney growing up and their parks are always packed. Doesn't really work like that. It doesn't really work like that. You might be like, oh, Nike, I got 20 pairs of shoes, 50 pairs of pants, but that doesn't mean it's a great investment, right? So let's go through these other ones pretty quickly. Spent a good amount of time on Nike there. So FedEx is tanking 9% in the red right now. Who would have thought after what we saw with UPS? I mean, UPS collapsed as well. So FedEx reported earnings per share. Where are we at here, guys? I can't see it. Maybe I'm not seeing it here. Earnings per share, oh, here we are, adjusted of $4.51. That missed the $4.54 expected, and sales came in at $22.2 billion versus $21.89 billion. So missed EPS, beat on sales, not too bad, and they cut their full year 25 EPS outlook to $15.15 to $15.75. That's not great. They also cut, it looks like they cut their guidance across the board. A lot of analysts are cutting the price target, or maybe not. Yeah, they are. Raymond James, Wolfe Research, Fubon Security, Susquehanna, all of them are cutting price targets. Goldman Sachs, Citigroup, TD Cowen, that's bad. So, FedEx is getting demolished. Probably another stock I would stay away from, quite frankly. This thing is getting destroyed, and it's still up on the 3-year off the low from a couple years ago. But I don't know. I think there's other opportunities better than a FedEx or a UPS. Not saying they're bad, but yeah, totally struggling right now for sure. And Micron, let's pull this up. Micron is also down. Holy smokes. All 3 of these are getting hit, guys. And Micron's continuing in this horizontal channel, whatever you want to call it. sideways trading action that it's been seeing. We're continuing that. You know, we've had support for months at about $85, resistance at about 110, 112. We got hit there. We got hit there a couple of days ago, guys. Or actually, that was this morning, literally, or yesterday. We got hit at 110. We failed breaking out. So clearly, earnings were not good enough to push the stock higher. So let's see. Micron reported a $1.56 EPS on an adjusted basis, and that was versus the $1.42 expected. So they beat EPS and they beat sales. 8.05 versus 7.89 billion expected. So a double beat there. They see Q3 EPS of $1.57 plus or minus 10 cents versus $1.47 expected. Revenue of $8.8 billion plus or minus 200 million versus $8.48 billion expected. So pretty good guidance there, guys. Maybe the stock was just way overbought heading into earnings. That's probably what it is. It looks like the stock, wait a second, did it pop initially yesterday? It might have, yeah. So it must have been something in the earnings call because, look, we went from 103 to 110. Now we're back to 94. Oof, man. This thing is down 15% from the high right after earnings came out. That is not ideal. Not ideal. But judging on the past here, each time we've gotten towards $85, $90, we've gotten a rebound. So let's see what happens here, guys. Be patient. It's a falling knife on MU. But out of all three of these for a trade, I think Micron might be the most attractive in due time once it finds support here. And we'll see where it goes from that point. So what do you guys think? Let me know in the comments. Hit the like button. Make sure to subscribe. Follow along for more content and get your 30 stocks from Moomoo. Check out the link down below or go to stocksurfest.com/Moomoo. Deposit at least $100. You get 5 stocks. Deposit at least $2,000, you get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY. Guys, I'm telling you, it's a no-brainer. So check out that link down below or go to stocksurfest.com/Moomoo. And with that being said, cheers. I'll catch you guys in the next video.